Hello everybody, this is the top-down analysis for the year, and here I'm going to look at the monthly and the weekly charts, and let's have a look. Okay, what are the interesting charts? Well, it's a euro dollar. It's always interesting, right? And the euro dollar, well, we've seen here this long-term trend in change that I've talked about many times. Well, the break of this red resistance, this was basically the moment where I had to change my long-term big picture outlook. That was valid for 12 years, and I had to change that with the break of this. And the break of this told me, well, now we're in a phase for maybe 10 or 15 years where the dollar is getting weaker and weaker here against the euro, right? So if price goes up, the dollar gets weaker. We can see that here on the monthly chart. Well, it has been in a consolidation, and how did I come to this change in big picture outlook? Well, it was basically this pattern here that had formed on a weekly chart. It started to run, we see down here. It was very close to run for those levels, and there's a big attraction here on the par level, the one with the 4 zeros. That's a big attraction level. So price gets drawn towards these levels, pulled towards these levels. Well, price was not able to get there despite this big pull. Well, this tells me that there's a lot going on the other side. So a failure to follow through on the downside is actually counter trend. Yes, it's a counter trend signal, and this is basically what helped me after the break of this the red resistance. Well, now that we have actually changed here from a long-term downtrend into a long-term uptrend. So this was down since 2008, the last great financial crisis, and now I'm expecting to go up for the next 5, 10, 15 years. And we can see here, well, this is a consolidation, and that's an S1 pattern. And on this S1 pattern sits on this consolidation, horizontal consolidation line. And if this gets broken, like if price goes above this line, let's give it a little bit more leeway. Let's let price break this wick high. Well, this then is the final confirmation that the dollar is going to get weaker and weaker, because as price gets into this area, well, this is free fall territory. Price can move higher without any resistance, right? And then, well, the resistances that are coming up, well, these are stop run levels. We should see price move through these levels pretty dynamically. So we're going to see what's happening in these months and this year to come. We're very close now to re-break this line, right? So it's getting interesting. So this is the second leg in this early long-term uptrend in the euro dollar. So the euro is strong against a weak dollar. Well, the dollar is not only weak against the euro, it's basically weak against all other currencies. Let's have a look at the euro. So the euro is strong. Let's see how strong or weak it is against the pound. Well, we are in an uptrend here. And if price goes up, well, that tells us that the euro is stronger than the pound. This is a consolidation. It's an S1 pattern. So I'm actually seeing here a nice move. Again, here, there's the par level. So price is drawn towards these levels. So that's a great chart to trade on lower time frames. It has a lot of upside swing potential. Now the Swiss franc has shown to be very strong too, right? It's actually even stronger than the euro here, the euro-Swiss chart, right? So if price goes down, means that the euro gets stronger the Swissy gets stronger against the euro. And I'm actually expecting this is a pronounced level. This is a great stop run level. And now here, as price finds refreshes, gets in some energy, we might see at a second. At another leg down or a third leg down, we might actually see a break of this, and this might trigger a lot of downside momentum. You see, these price levels have been tested for 8 years. So if price is actually able to get outside of this consolidation range, we'll see moves like we have seen before. Basically, we're looking for something like this, right? And these will be, well, I've extensively traded this chart back then, the beginning of the 2012, maybe 2011, and we'll have times come back like these. I'm pretty convinced. Now let's have a look. How is the euro doing against the Australian dollar? Well, the Australian dollar is actually the strongest currencies of all those that I'm looking at. Well, the Kiwi, the New Zealand dollar is slightly stronger than the Australian dollar, but it's small. So let's just say that the Australian dollar is the strongest currencies of all. We can see it here. Well, it's stronger than the euro, right? Here, just recently, since Corona, since the spike high, it has shown a lot of it has shown strength, and all these are stop run lows, and we might actually see here as well price move lower. Yeah, and it was indicated from a top-down analysis before. This is what we're looking for, and it already started, right, to do this. Currently, it's sitting on the 200, some resistance, and it might just find its way through this resistance. Now, it's always interesting to compare like a strong currency like the Australian dollar against the US dollar, which is the most important one. And well, as you might imagine, dollar being weak and the Australian dollar being strong, well, this is what we see here, right? A strong up move. So this as well is a very early phase of a long-term uptrend. This is what I'm expecting here. The Australian dollar has increased in value quite a bit, right? It came here from 55, and now we're at around 80. So it has it has gained a lot of value. So this is a spike, but a potential spike of the 200 moving average. So we might go through, and we might see that here in the first quarter of this year. If we get a spike through, we might even get to the 09,000 level, which would basically be a doubling in value of the Australian dollar against the US dollar. Now, an interesting chart is always the Swiss franc, right? It's one of the strong currencies against the weak one, so the US dollar. It's basically, well, it's my most preferred chart as an investment idea, like holding over a couple of years. You can see here it's nicely in a downtrend, and on the monthly, well, this is where it gets interesting. On the monthly, well, let's see if that helps. If I pull it over here, on the monthly, well, what we see, well, it's come here, it's in a downtrend, and this is a consolidation, right? A sideways consolidation, and it's basically an S1 pattern. This took a long time to start running, and I've observed that, well, since the last 4 years. I'm looking at that, right? This was the highest high, and then all these are lower highs. And just recently it has started actually to develop momentum. So this momentum, what we see here, well, it's taking out these levels, right, on the S1 pattern. So it's a monthly S1 pattern short, and it has a lot of potential to go much lower, right? So I'm seeing the US Swiss. So the US Swiss is basically the mirror of the euro dollar. So euro dollar is up, and US Swiss is down. And as you can see, well, as we have as we have seen before here with the Euro Swiss, the Swiss is stronger than the euro, right? So I'd rather be short the US Swiss than long the euro dollar, right? Because the Swiss is stronger than the euro. This is why this is my preferred chart here for the long term, and it can go well below the 06,000 here. Let's have a look at the US yen, both very important currencies. It's a special situation chart here on the monthly. You can see how price was getting support with the 200. It was tested over and over and over again, right? So this was a deep test, a wick rejection bar. So now we're getting there with small bars, right? And now, well, it's interesting to see what happens now. This might be a final support, so we might get a 4-5 time bottom, and then we see a spike higher, or we might see that this support this support gets broken on the downside, and then we might actually see a big move down. So something is going to happen here with the US Swiss. Somebody is going to give in, either the bulls or the bears. So we will see that over this year to develop, and it's interesting to observe what's happening. Now the Australian dollar, Swiss, so both are strong, right? Both are strong currencies. But we can see, well, the Australian dollar is even stronger than the Swiss, right? So that's always interesting to see the relative strength. Well, even more interesting, because they're correlated, is the Australian dollar against the New Zealand dollar. They're correlated, right? And we can see it here. It's basically it's going sideways, right? But if you're zooming out, well, we can see that the New Zealand dollar, well, this chart goes down. It's a momentum move down. That's a consolidation. So we can expect this to be a trend continuation. So we should see another move down, which means that, oh, the Kiwi is actually even stronger than the Australian dollar. I'm not 100% sure with that, because all these here above are stop run lows. So we might see a big spike or an initial spike to the upside, and then we might see the trend to continue to the bottom. Let's have a look at pound. All right, pound New Zealand. That's another special situation chart, right? So here we're in a downtrend on the monthly, and this is an S1, and within this S1 there's another S1. So it's a double pressure charting situation, and this has triggered just recently. This is triggered too, right? So with two patterns in a row, there's a lot of energy in the system, and we should see a move at least, or even stronger than what we have seen here, right? So it should go down really, like as indicated, strongly like that towards the par level. So this is a very interesting chart to observe, and the stop run levels, you see, it's clustered. This is one, this is one, this is one. So we have 5 stop run levels, and it's a pattern within a pattern. Great trade idea with a low risk idea for either for a long-term investment or to trade a lower time frame charts, while having this in mind that there's a lot of swing potential. Now let's have a look at Singapore dollar against the US dollar. This is for the my Asian clients. Always interesting. Well, we've got a triple top here with the Singapore dollar, and the Singapore dollar is getting stronger against the US dollar as well, right? So now we're shooting for this level, and this level, if it gets broken, well, then we've got another couple of other levels here, and we should see a move like that. So a triple top is always strong. And we should see the Singapore dollar developing really nicely against the US dollar. So well, overall, what can be said is that the US dollar is weak against basically all of those currencies, right? The euro is stronger than the US dollar. The Swiss is stronger than the euro. The Australian dollar is stronger than the Swiss, the euro, and the US dollar. And the Kiwi, the New Zealand dollar, seems to be slightly stronger even than the Australian dollar. So the Australian dollar has been the weakest currency for the last couple of years, right? So what goes in line with my change in big picture outlook? So it seems like the Australian dollar plays an important role here, right? Because the outlook for the Australian dollar has changed completely. From being the weakest currencies over the last couple of years to become the strongest currency over the next years. I'm not sure what the reason for that is, but these things often get revealed then later. It's just what the charts are telling. So yeah, I hope that was of interest, and it's going to be an interesting year ahead. Thank you.